Also, when you think about a wedge pattern, a wedge is actually a pattern that's in between a channel and a triangle. So you do get some compression of the support and resistance lines, but you don't get the actual crossing. And finally, the flag pattern is very close to a pennant and also a channel pattern. So you get parallel lines that are narrow and elongated like pennants are. So those are the key characteristics of a trending chart pattern. Now with the AutoChart software, you can go into the program and select in your search these particular patterns. If you are the type of trader that has a preference over trending or non-trending, you can go in and select or deselect some of these chart patterns inside the AutoChart search. Now a non-trending pattern is a pattern with a rating of 1 to 3, and it's considered an extreme sideways pattern. Okay, so in other words, since we already know a non-trending pattern basically means sideways, when you see a 1 to 3 bar rating of this initial trend, it's really the lowest of low as far as sideways patterns are concerned. It means the market is basically flat. In a 1 to 3 bar pattern looks like this. You can see that we started out wide and we gradually narrowed and we finally got into this very, very flat area here before the market made its move. You can see the compression of the support and the resistance line in this triangle, and that they're headed out into the future. If they came out in the future, they'd cross at one point. So this is what is meant by a 1 bar initial trend quality pattern, that there's just this gradual compression, and it's as I said before, the trending, a triangle pattern is non-trending, so this is the lowest form of the non-trending pattern that you can get. A non-trending chart pattern with a rating of 4 to 5 is considered a volatile sideways pattern. So again, by definition, you have non-trending pattern. Now you're looking at volatility that's creating this non-trending nature of this pattern, and so you're expecting to see more whipsaw action or more violent swings. So you have a pattern that isn't as quite as flat as a 1 to 3 bar, but isn't as robust as a 10 bar. So you're right in between. And because of again, this pattern suggests trader indecision, you're getting more volatile swings as traders try to force the market either direction, but they run out of room and they turn around and go the other way and they start up again, much like the way the stock market is trading right now. Violent moves in both directions, but really a non-trending type pattern. And this example would look like this. This is where you have a 5-bar rating, and you can see there is a swing here that was pretty huge that set the triangle in motion, and then you had this action here where it wasn't quite flat, but you had a spike down here. You could see that we have this alternation between green candlesticks and red candlesticks, suggesting that one day to the next, traders aren't sure which way this market's going to go. Then you have a failed breakout here and a decline with these candlesticks with fairly large wicks. So that's a pretty good definition of volatility and uncertainty. Next slide we want to look at is a 6 to 10 bar slide or pattern, and this is where a trend is identified inside basically a non-trending pattern. So I know it sounds kind of strange to think about it, but what it means is that we have this non-trending pattern, which is, say, a triangle pattern, but at times during that formation there seems to be a pretty large trend going on there. So we want to look for that characteristic inside this particular screen. or this particular chart pattern. And that pattern looks like this, where you could see that it starts out wide like the typical pennant or triangle pattern. In this case, it's a pennant. You can see we have an initial trend rating of 10. And when this move was made, you can see that it's dominated by green candlesticks or up candlesticks, and there's just one red in there. So this is really where you see that there's a trend inside a non-trending pattern. And then once it reaches this top, it goes into a sideways motion and becomes a trending pattern. Here's where you can see the classic definition of the support and resistance line forming the apex, and basically telling you at this point that this market has to move in either direction. So it's a classic pattern that if you're comfortable trading and you want to hang on and you have the patience to hang on long enough, it pretty much telegraphs that when it's ready to move, and so your reaction is in the direction of the movement. And you can see in this case it broke support and it's got a target zone down here. This all started with a 10-bar initial trend rating. Okay, we're going to start. We have a question here, a quick poll question. And that question is, what does a 6-bar rating mean? And the possible answers are a trending market, a more volatile sideways market, or a quiet sideways congested compressed. So what does a 6+ bar rating mean? And we'll open up that poll question to the audience. And we see right out of the gate, with half voted, we see over 64% selecting a trending market. Okay, that's about what we had before. 65% voted, and we ended up with a 68% trending market. 29% is selected a more volatile sideways market. That is a high enough number where I think I'll just repeat what I was talking about earlier. 1 to 3, you're going to get your lowest of low sideways markets, the really flat type market. A 6 to 10 is a trending market. 6 being the lowest trend and 10 being the highest trending. So therefore 4 and 5 are somewhere in between this flat and this expanding market, expanding trending market. So with trader indecision pretty high, you tend to get more volatile swings in a 4 and 5 bar market. So I just thought I'd explain that further. And to recap trending patterns, or to start trending patterns and non-trending patterns, I just wanted to tell you right here that any trending chart pattern can have an initial trend rating of 1 to 10. Okay, so although 6 to 10 is preferred, when you select your trend patterns or your search filters on AutoChartist, you can leave it at 1, or you can set it as high as 6 or even as high as 10, and it's going to try to find those minimum patterns. But a trending pattern can fall anywhere between 1 to 10. A trending chart pattern with a rating of 1 to 3 indicates a weak trend and sometimes accumulation. So remember when we talked before about what a trending pattern is, think of a channel pattern. Okay, you can have a wide channel or you can have a narrow channel. And what AutoChartist will do is pick up this initial trend rating, and a 1 to 3 indicates possibility of a weak trend. And what that may mean later is that when the market goes to break out of the channel, that it may not have enough power to do it. So you have to keep an eye on when these patterns form, whether this initial trend is strong or not. So that's one of the reasons why you want to look at this initial trend and you want to know if it's weak or strong. And this is what this chart pattern looks like. You can see here that we have a rising wedge. As I said before, it's basically a channel pattern and a triangle pattern together, that these lines are not quite parallel like a channel, but they don't actually cross. They come close and they narrow like a triangle, but they don't actually cross. And this action in here, in the beginning with this gap and this sideways action here and these thin candlesticks, they tend to indicate that although we have a trending pattern, which is a wedge, rising wedge, this is a weak trending pattern. All right, so that's the reason, that's what we're looking at with these three-bar initial trend. Now, one thing that you want to remember is that when you have a weak trending pattern, as I said before, if you have a channel or you have a wide set wedge, chances are that with a low initial trend rating, it may not have the power to break through the support or resistance line as you would normally expect. But in this case, since it's narrow here, as I said before with the triangle, that the tighter you wind this, the more likely it's going to catch the eyes of the traders. So once they may lay off the market when it's insider, you can see how narrow these ranges are and how thin this trading is. But once they have confidence that this market's going to make its move, you can see that there's expansion of the ranges. That's just human nature of a trader, is that the greater the confidence they have, the more likely they're going to put on positions, large positions, and a lot of these automatic trading systems will pick up a pattern like this. And you'll start to see increased